Good evening, all. This is Shea Horowitz, ShogunTrading.com. This is Sunday night. Hope you had a great weekend. This is our free weekly newsletter. I want to talk a little bit about the market, about the bailout, and so on. Why? Because everyone else is talking about it, and it's my prerogative to talk about it as well. The market is basically reflecting exactly what's going on in the economy out there. It's a direct reflection. The market is in a wait and see mode right now, and I'll talk about this first. This is a daily chart of the S&P 500, but I want to show you the hourly chart so you can see basically what happened over the past week. That's last Thursday, last Friday, and then the 22nd, 23rd, 24th, that's this week. So the market went up, and these are Fibonacci numbers, and you can see that I stretched them, and the market went down to the 38% line, 62% line, and back up to the 38% line, 62% line, and it basically stayed right in between them. Why? Because the market is consolidating, the market is looking for a decision. It wants to know which way to go. That's basically what's going on with our economy right now as well. If I told you that I'm going to bail you out, I'm going to pay all of your credit cards off, and I'm going to pay your mortgage off, just hold on. Don't do anything. I'm going to pay it off. You would hold on. You wouldn't do any kind of business. You wouldn't do anything. And that's something we're seeing in small businesses. My friends that talk to me say that economy slow down. Everybody's on hold. Everybody's just waiting to see what the bailout is going to be like, and if they're going to get bailed out, if their mortgage is going to be paid for, and so on. Now, the more you yell fire in a theater, the more people are going to they're going to panic. And in my opinion, that's exactly what happened. People were inundated with talking heads saying depression, 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 depression. Save your money. Don't buy anything. Don't refinance your home. Don't because you're not going to be able to. Don't buy a new home because the real estate market is crashing. Don't spend any money because you're going to need the cash. Don't invest. Don't do anything. Just stay put because the economy is crashing. You hear that enough, and you start believing it. And all of a sudden, you hoard your money. And right now, cash is king. And everybody was going to tell you that cash is king. That's why there's such a rush on the banks. Because people are getting this kind of information all the time that your bank is going to crash. Go take your cash out. You know what happens when IndyMac, for example, perfect example. IndyMac, they said IndyMac is going to crash. So there was a run on the bank, and guess what? IndyMac crashed. And Washington Mutual, same thing. There's a run on the bank, and they crash. Am I blaming just the media or politicians? No, but I think it's a major factor. This is an elections year, and during an elections year, things are just absolutely frozen. Nothing gets done. And it's the same thing with the bailout right now. The banks got an announcement. The banks were told, hang on, don't do anything, don't lend to anyone because we're going to come with a rescue plan. And guess what the banks did? All of a sudden, they ceased doing business. Frankly, I think it's absolutely ridiculous. It's not the right thing to do. You want to stimulate business. You want to stimulate spending. You want to stimulate investing. You don't want the economy frozen. And if you keep talking about how bad the economy is, you are causing the freeze, or at least you're making the freeze so much worse. By doing so, instead of encouraging people to relax a little bit, we're gonna get through it. We're gonna help out everybody. Business as usual. They'll be out of it. If you look at mark to market, Sorbin Oxley, if all these different rules that came out and absolutely devastated the financial industry because it created panic and all the time in a state of panic. Frankly, if you talk to people right now, yes, business is slow, and business is slow because people are saving their money. But I still don't think that it's fundamentals are that bad. I don't mean to sound like McCain, but it's. I think the fact that we're freezing is we're freezing ourselves. The fact that people are not doing anything is partially what's causing it. Am I happy with the bailout? I'm not happy with the bailout. I don't like the idea behind it. I don't like the negotiations. I don't like what came out of the negotiations or anything along those lines. But if the bailout unfreezes the system, if the bailout unfreezes the system just by the mere fact that it tells the system, okay, we're done. You know, you're not frozen anymore. Keep going, business as usual. Start doing something. I think that's good enough. I don't necessarily think that the details are quite as important as the fact that, okay, you know, keep going. Get going again. You know, business as usual. I think that that's more important than anything. I don't think anybody really likes the bailout, but everybody thinks that it's necessary to get going. What's going to happen this week? Well, first of all, we have a Jewish holiday this week, a couple of them actually, and that's going to make the market a little bit lower volume. Does not necessarily mean that the market is not going to move, because when the market has low volume, it can move, and it can move quite well. But it is going to be lower volume, so you have to watch out for that. We have been trading lower volume. I've been recommending our clients to trade lower volume in and out of the market on a daily basis to avoid the noise. And we've been doing, you know, quite all right with the short-term trades, but not a whole lot of them. We mainly stayed out of this mess because if you look at S&P 500, you know, every day is a different direction. Every day is a different mess. Let me show you the Dow Jones Industrial Average, for example. And you can see that Dow Jones is basically the same thing. Also, every day is a different direction, and that's not something that you want to swing trade in. But you know, there's still some. My typing is not working today. There's still some trades that are working pretty well. RCL, for example, 23.39 was our short, and you know we came down with it pretty good. SPR, that's another stock that we shorted 16.63, went all the way down to the 15.59 level. You know, while the market itself is absolutely a mess, these are tough trades. They're not easy by any means. Short at 16.92, went all the way down to 16.08. These are not easy by any means, but they are working, and when the market is choppy, you have to trade choppy. It's the same thing as driving around in your car. If you see a choppy road condition, such as traffic jams or whatever, you switch over to first gear. You cannot drive in fifth gear in highway gears when it's choppy. It's the same thing right now. We're trading very short term. We are trading smaller size. Our foot is on the brake all the time. And if there's anything that we don't like, we come out right away, and we're not risking a whole lot. The worst thing you can do is to gamble right now. I had a friend of mine call me up and say that, you know, he wants to buy Fannie Mae. And Fannie Mae, you know, a lot of people made a lot of money for it because, you know, it went all the way down to zero, you know, the 37 cents level, and went all the way up to 276. And of course, when it goes up to 270 is when he calls me up and says, hey, I want to buy. But, you know, I advise him not to buy because, you know, this is just based on rumor, based on everything along those lines. And the next thing you know, it's down to $1.09. That's quite a substantial dive. Yes, there's money to be made in picking up these stocks off the bottom right now, but there's also a tremendous amount of risk in them as well, and I don't recommend doing it. I like trading as a system. I like trading for a living, and trading for a living, we absolutely control our risk. Capital preservation is more important than capital appreciation, and we extract money out of the market on a consistent basis. That's the point. Always take your 2%, 5%, 2%, 5%, 2%, 5%, 20%, 2%, 5%, 2%, 5%, 20%. All the time on a consistent basis, and lose very little. Make your losses business expenses. Anyway, I've yacked enough. Thanks for enduring. Have a great week. Watch what happens. And stay safe. You know, keep your stops. Make sure that you obey your stops. Futures are not really moving a whole lot, and I don't expect them to move a whole lot until we actually get details of this plan. Have a great night, and I'll talk to you tomorrow. Take care. Next week. Take care.